paper raids is they can't keep them down. I mean, the gold price, it keeps bouncing up like one of those punching clowns. And right now they've made it pretty clear that they're going to defend the $2,000 level.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it is that time of the week once again for Denver Dave Kranzler's silver and gold market update. As you can see, Denver Dave has a snazzy new t-shirt there. And
well, it's the second time I've worn it. This is your send-off present.
Well, we actually saw you out of your cave last Friday. As I said,
yes, we did.
Bye to some folks in Denver for now, and I was impressed. I know you don't leave often. And in honor of your shirt, I wanted
not because I'm worried about the virus. I'm just a misanthrope, so I don't like being around other people.
Yeah. Well, I hear you. And anyway, that's a nice shirt you got there. And in honor of that, decided to record from my garage today. As you can see, nice stack. So yeah, I'm not sure yet. I'm heading up to Minnesota to meet up with Andy, and then get ready to film SilverFest, record SilverFest. I'm not sure. He said I can broadcast from and sit on a stack of 1,000-ounce bars. So this could be where I will be. We'll check in with him this week when we do the physical market update. Although, Dave, it's a pleasure as always. And how's everything going with you so far this week?
Pretty good. I just wanted to give a shout out to Robin in Australia, who sent me this beautiful 1-ounce silver opal from the Perth Mint. It is, I guess it'd be the equivalent of at least Master Strike quality from the U.S. Mint. And I mean, it's just a beautiful coin, and thank you. I appreciate it.
Yeah, it is a lovely coin. Can you get the part that looks almost like, I guess, the opal part? Can you get that a little closer to the camera?
You won't be able to see it. I mean, it's hard to see.
Big Daddy. I know you can do it.
Well, I just put it away. It's a pain in the butt to get out. But it's an opal that is in the shape of Australia, the country, the continent.
Okay, so that was just an excuse that you couldn't see it. You were too lazy to get it out of the box again.
No, it's hard to make out, but it's beautiful. It's a beautiful coin.
Well, I'll tell you what, she was kind enough to send one to my beautiful mother, and when I see her in about a month and give her coin, we'll get I've tried to get her on the show. So far she says no.
I don't blame her.
But well, maybe she would come on if you were part of it. She was a big fan and excited to see you when she came out to visit, and we saw you in Golden. And anyway, speaking of Golden, you see that segue there? You know, I transitioned from Golden, Colorado. Now I'm going to go into gold and the gold market because, Dave, you did not cover this in yesterday's Mining Stock Journal. So I'm going to give you a chance to make up for that, because what you're apparently missing is that yesterday the gold price slumped over 1.5% on the dollar rebound and economic recovery hopes. You may have to rewrite the last couple short sellers journals too, because what you've been missing is the dollar is firming amidst a strong rebound in U.S. manufacturing sector, fueled by hopes of not just recovery, a rapid recovery in the coronavirus hit economy. This one's coming from Reuters, and at least as I think people who watch the show know, my personal belief is that a lot of these headlines are phrased in a way where, you know, it's not outright false, but it's definitely not the way that I would phrase it to give someone the impression of what's going on. So, Dave, is that why gold was slumping, because the economy is fixed?
It's booming, man. I mean, that's what this K. Satya Narayanan from Reuters, I mean, he or she, that's what she's saying, man. It's booming. Not in the numbers that I look at, and I actually look at the grassroots Main Street data, not the numbers that are whispered into my ear like sweet nothings from Wall Street criminals. I mean, that's all this article is regurgitation.
Whoa. Hold on a second. I got to check you there. So Wall Street criminals whisper sweet nothings into your ear. What do you?
Not my ear. The author of that Reuters article.
Okay, I was wondering what you did after
mainstream
you left the
media.
party on Friday.
What's that?
I was wondering where you went after you left the party on Friday. I didn't know if you had some. Amy Dimon was whispering, "I'm gonna smash silver."
I don't look at any Wall Street research in any capacity or respect because it's nothing but propaganda designed to sell stocks. So whoever this author from Reuters spoke to at whatever Wall Street firm takes this person's calls was just regurgitating what was whispered into this person's ear from some shill at a sell side shop. And that's it. I mean, the dollar's firming. I mean, it's dropped, what, about 12%, which is a massive move, 10% massive move for any currency, this year. And it has a little bit of a dead cat bounce because hedge funds are probably covering up some of their shorts and taking profits ahead of the holiday weekend. And that's called firming up. No, gold was hit yesterday, and it actually didn't start getting hit until after the AM London fix, okay? Around 5 a.m. East Coast time. If you go look at a 15-minute chart of gold, you'll see what I'm talking about. Right after the AM fix is settled, the price of gold started heading south. It bounced, and then right after the COMEX opened, it started getting hit again. So, I mean, it was just another paper raid. And the funny thing about these paper raids is they can't keep them down. I mean, the gold price, it keeps bouncing up like one of those punching clowns. And right now, they've made it pretty clear that they're going to defend the $2,000 level. But my guess is that won't last. I bet you before Columbus Day, we'll be back over 2,000, and we'll probably hold that level.
Yeah, I know a lot of people are wondering.
Do you like the way I said mid-October? I phrased it in terms of a holiday.
Mid-October is a holiday?
Well, Columbus Day, isn't that in mid-October usually? Although I guess, because of his historical background, they may have to erase that holiday off the calendar.
Well, clearly what I'm taking away from this is that we need to get the Denver Dave calendar, one of those like you pull off January 1st, and you could insert your own holidays and other fun, maybe you could say like on November 5th, this is what I did in 1922. In fact, you could tell us, on your calendar, like, but, times like during the Depression in the 20s, you're like, this is what it was like 90 years ago. And other good stuff like that. But Dave did see, obviously, gold went over $2,000. I wondered if it would stay over. Maybe that was a little naive on my part where, I guess something like that. Not surprising that it's gone back and forth a couple of times. Do you think we're reaching the point where it goes over and doesn't come back? And maybe I'll contain myself asking about silver in the $50 level for a minute or two, but why don't we start with gold there?
I'm sorry, what's the question?
Well, does it next time it goes over 2,000? I mean, are we close to the point where it doesn't come back under?
Oh, if anyone was actually to say, yeah, we're going to go back over 2,000 and never go below it again, I mean, that'd be just crazy. I could do what Bank of America did. They came out and said, I think it was like within the next year, the S&P will be somewhere between 2,200 and 4,000. It's like, wow, really go out on a limb there on your forecast, right? Yeah. And within the next year, gold's going to be somewhere between 1,000 and 3,000. How's that? If I was B of A, that's what I would do. And then I would call that author up, that writer, not even writer, that monkey with a typewriter at Reuters, and whisper that in her ear or his ear, whatever, hey, gold's going to be between 1,000 and 3,000 within the next year. it, you know what? I'll read this. This is what my thought is. You probably read it. I released my mining stock journal a day early, as you know. This is what I wrote, and this is what my conviction is and what I'll stand by. And I showed that chart from Crescat Capital that basically plotted the XAU, the Amex Gold Bugs. Is that the Amex? No, I think it's the Philly Gold Bug Index or something. Versus, I don't really watch the XAU, but it's sort of similar to the Huey Index, versus the Morgan Stanley World Stock Index. And you saw on a relative basis how cheap mining stocks are relative to stocks on a global basis. And I said institutional investors have maybe 0.5% of their assets invested in the precious metals sector, if that. And we have seen that there are institutions now that Ohio Firemen and Police Pension Fund is making an allocation. I think it was up to 5% into gold. And I don't know if that'll be GLD, but at the peak of gold and silver in 1980, institutions had 5% invested in precious metals in the sector. Since then, that allocation has not been above 1%. Eventually, a monster move is coming in silver and the mining stocks, though no one can say when it will occur. I think that move is when you start cashing out, converting digital fiat currency into more bullion. Note, physical bullion, not GLD, SLV, physical gold and silver, for instance, by calling up Miles Franklin. And the catalyst for the move will be large institutional and wealthy investors reallocating cash from the stock market in general into mining stocks. I believe Buffett was a harbinger of that, even though he only bought a small amount of Barrick in relation to the size of Berkshire's assets. So that's what I think. And I mean, I don't want to be held hard and fast to this, but I think there's a good chance that by the middle of October we'll be back over 2,000, and within a reasonable range of volatility, we should hold that level.
Yeah,
I mean, look how long it took to get over 1,900, right? And now we're holding 1,900. I mean, they've attacked it every which way. They've pulled out all the stops, as far as I can tell, including dumping a lot of physical gold at the AM and PM London fixes, which I think that gold was sourced from the BIS, which did a record level of gold swaps in July per BIS records.
What percent chance would you give to us seeing $1,800 gold again?
I have no idea. I mean, of course it's possible. It's very possible we could see gold with an 1,800 handle on it again. I don't want to handicap that. Let's just put it this way. A year from now, we'll be significantly higher in gold and silver than we are right now. So however you want to define significantly, I'm not putting a number on it. The market's too manipulated.
I hear you, and I think that's a wise answer from a grizzled veteran like yourself. Now, I did mention silver there, and fortunately, some good news. Dr. Mark Faber just confirmed for SilverFest last night, which is quite exciting.
Oh, wow.
And a panel that I think you might enjoy seeing. His subject is the next time silver hits 50, does it go through that level? So similarly, with silver, what do you think happens? I mean, I think about it. We've never really known what silver is truly worth. I mean, the government's had its paws in it, even before, the Hunt brothers, when it was still coinage, and they had their stockpile suppressing, lifting, raising the price. So when you think about silver hits $50 in 1980, doesn't get to 45 or 60 in 2011. But, I mean, we know everyone's sitting there looking at these charts. Again, you know more about the technicals than I do. But it just seems that it would be interesting. So I guess I asked the question and asked a longer version of the question. But what do you think happens when silver hits $50 and does it go through? Or do you need to wait until SilverFest and Mark Faber gives you some insight on that one? Or can you take it now? I don't want to put you on the spot.
Is he going to be broadcasting from Thailand?
What's that?
Is he going to be broadcasting from Thailand?
I believe so. I don't
Where he
think it's
lives.
actually Thailand where he lives, although maybe when he sees my silver stash, he's going to want to come up to North. I believe we're actually going to be broadcasting from a silver vault in Fargo, which should be exciting. But yeah, I think he'll
It's a good
be.
movie, too.
What's that?
It's a good Coen Brothers movie, Fargo.
I know. I'm curious if the accents will really be like that, which should be.
They are. They are like that.
Yeah, but anyway, what do you see happening? Well, is silver going to get to 50? I don't know. Maybe I'm just completely off my rocker here, but if so, curious any thoughts you might expect there.
I mean, are you holding the price of gold constant and silver goes to 50 while gold stays at wherever it is now, 1940 or whatever, on a December
I'm not
contract
doing it.
basis?
I I don't know that I'm holding the price of gold anywhere.
I mean, here's. I mean, there's no way to.
The
There's
price
no
of
way to
gold cares
know.
what I think. I mean,
Right.
I think
Okay.
Jeremy
Here.
Powell might be
So the
forcing
gold,
the
the
price
gold
of gold
silver,
higher.
the gold silver ratio bottomed out, just to say for sake of argument, around 31 in 2011. Okay. So if silver reverts to that gold silver ratio, with gold not even moving, it tells you that silver is worth $62 an ounce. Now, I mean, that's just one. It's like, you know, there, there's several different types of measuring instruments you can use to decide where you think silver should be valued. I think eventually it's going to go much higher than 50. I'm not, again, I'm loath to put a price target on it, but let's just say gold goes to 3,000, right? And the gold silver, there's some guy out there who said the gold silver ratio is never going to go below 70 again or something, or 80.
Who said?
And so that means silver's worth 100 if gold goes to 3,000 and the gold silver ratio stays it goes back to 100, right? I think anyone who really believes that that the gold silver ratio will be at 100 when gold's at 3,000 is mildly insane or mildly mentally disadvantaged. But
That was so politically eloquent how you phrased calling someone an idiot there.
So let's
like that.
I mean, let's just say 2 years from now or within 2 years, gold's at 3,000. Then pinpoint where you think the gold silver ratio goes. Maybe it goes to 50. Maybe I'm wrong and the other guy's wrong, and it settles at 50, right? So that would silver at $60 an ounce. But I think silver is going to go much higher, and I think we're going to see a gold silver ratio that this time, when the sector ends up going wherever it's going, we'll probably see a gold silver ratio closer to the long run 5,000 year historical average of somewhere between 15 and 20.
Yeah, I hear you on that. And I'm actually pulling up this chart.
What's going to happen is, I mean, and we've already seen it to some extent because the gold silver ratio has fallen from, I think it peaked out at around 135 several months ago. And now we're wherever it is, 71 or not 70, 71? No. Where is it? I usually take a glance at it almost every day. All right. So we're at 71. So I lost my train of thought there trying to do the calculation.
Backing out the gold to silver ratio. Although, question I often wonder.
Oh, this is what I was going to say. This was my point. Sorry to interrupt, Chris. Save your question.
Yes.
We've already seen the silver is poor man's gold effect with the gold. I mean, it's down almost 50% from its peak earlier this year, right? So, because what happens is all of a sudden, when more people kind of like in what I would define as the middle class, which, is probably a different definition than some people have, but you know, people are going to realize they need to have some precious metals, and they're going to look at the price of gold, and it's going to be 2,000, 2,100, 2,200, wherever it is when that hubris kicks in, and not hubris, when that realization kicks in, and they're going to be like, wow, I don't know if I have enough money to buy an ounce of gold, but oh, guess what? I can, for the money that I would use to buy an ounce of gold, I can buy 70 ounces of silver, and that's the poor man effect. I mean, gold and silver are both monetary metals. They serve the same purpose, right? They preserve your wealth. And so that's what I think is going to be the catalyst that drives the gold silver ratio a lot lower. You're going to start seeing a lot of people who, they might be able to afford a couple ounces of gold, but they'd rather own, a couple hundred ounces of silver instead of a couple ounces of gold.
Yeah, and Dave, just so you know, if you ever want to swap some of your gold for silver, that's another thing you could do by emailing your friend Yara at arcadia@milesfranklin.com, or if you want to pick up those 70 ounces. But in terms of the gold to silver ratio,
Yara looked lovely the other night, by the way.
Well, I know she was happy to see you. You look pretty cute in your, light linen. You had a light summery feel there.
It's the summer.
Yeah, and here we got the gold to silver ratio, which I remember when I saw this, I was like, wow, that's pretty constant for a few hundred years, and then just, gets a little nutty over the past century plus. Any thoughts on, is this just more involvement by U.S. governments and banks in the coinage, or what happened that it's diverged so wildly from? Because it's like, again, I get the gold to silver ratio. I understand there's what makes sense or what perhaps it should be. Do I want to go make a big bet on that? I mean, I don't know. It could easily go to 100 as 50 from where we are now. In my viewpoint, if you want to make a bet over the long term that it converges, yet, I don't know. I'd rather short something else rather than gold in relation to silver. But what has happened over these past 100 years?
Well, I mean, you can see where the ratio starts turning up a bit. That's right around the time that, technically, it was Lincoln, President Lincoln, who started removing the gold standard and the physical gold and silver backing of the dollar, when during his administration, some woman settled a debt by paying off the lender in U.S. Treasury bonds, whatever they called them at the time, and it was a big lawsuit that happened. And ultimately, by the time Grant was president, the Supreme Court ruled that it was okay to use government-issued assets like treasuries to settle as legal tender. And that was really that was the start of the disconnect between the dollar and the gold standard. So I do find it interesting that that's when the gold-silver ratio started to lift off a little bit, right around that time. And then you can see where it pops back up and then goes back down and then shoots back up. That's right around the time that the Federal Reserve was established, and also the IRS. So that to me is sort of represents the transition from a gold-backed monetary system, really gold and silver. I mean, I gave you that silver certificate.
Yeah, I want to cash that in.
You can take this to any bank. It was issued in 1923. You can take this to any bank and exchange it for $1 worth of silver.
Yeah, I don't want the certificate. I want to cash it in and get the silver.
Well, you can't use them. And I have a $5 note that you can do that. You could do that with gold. So to me, this is where you see you just kind of draw a general uptrend line there, between 1900 and now, and that represents to me the world moving from a gold-backed monetary system to the dollar is the reserve, and the dollar is completely unbacked, except unless you have full faith in the credit of the United States government, which I personally do not.
Who wouldn't have
I think
that?
what's going to happen is we're going to have a monetary reset, and a lot of guys are saying this now, where gold is reintroduced into the global monetary system in some form, some fashion, and then you're going to start to see the gold-silver ratio go back down, because at some point they'll need to fix the price of both, and they're probably going to need to include silver in the basket of along with gold as backing the currency, and so they're going to reset the price of silver higher in order to give silver more value, so that they can create a currency backed by physical metal.
Yeah,
and this is why I don't really invest in things like platinum and palladium, because I don't think they will be included. They never have been, really. They're not technically monetary metals. They're industrial metals.
Well, I would agree with that, although certainly I'm darn intrigued that between what's already been posted for delivery and the open interest for September, I've been reading, apparently that number is bigger in palladium than what actually exists on the COMEX. So I'm going to keep an eye on that. And it was funny as you were...
I'm not saying they're not good investments. I'm just saying I'm not involved in them, because I'm strictly a monetary metals guy.
You're an old-fashioned guy. I get it. It was interesting in the description here. Classic, because Coinage Act of 1834 attempted to rectify. Government always coming in, they know how to rectify the markets, which ones are too high and too low. So they tried to rectify the imbalance by changing the price ratio. However, as is customary with government intervention, this second act only succeeding in causing the opposite problem. Now undervalued silver left the country for exports, import gold. You can see...
You see that? That's Gresham's law right there.
Right. So that's at the heart of it, why I talk about silver so much. I mean, all right, I wouldn't advocate selling unbacked silver contracts that you can never deliver, but man, when the unintended consequences of that come through, I think that's why you wear the shirt, why I get pictures of this silver vault. It looks like
real quickly.
Powerful.
Real quickly. Wait, vault, I thought that was your garage.
Yeah. It's my garage.
So here's another example of Gresham's law.
Yeah.
In your travels over the next week between here and Minnesota, and wherever you go and use coins or get coins as change, try to find a pre-64 silver dime or quarter. You won't be able to find one. You want to know why? They've all been removed from circulation by people who, when they see them, they know what they have, and they keep them. They throw them in the drawer. You're not going to spend a pre-64 dime, for its face value of 10 cents, right? Because the melt value's probably worth... I did the calculation not too long ago. The melt value of a pre-64 dime is probably worth close to $1. So that's Gresham's law. Bad money chases out good. You got, these crappy tin nickels and quarters and dimes or whatever they make them out of now. And all of the silver coinage is out of circulation.
Yeah, well, actually, I am planning on finding a whole bunch of silver coins because I'm heading up to Miles Franklin. Actually, they're running a special on junk silver this week.
There you go. There's your pre-64s, but you got to pay the melt value plus a premium. Not the face value of the coins.
I did buy $1,000 worth of Kennedy half dollars, so we have more stuff to give away at SilverFest. And one last quick note, just because something you said reminded me of it. I may actually have to, well, not have to, but I may actually do it and rebuy Dick Cheney's autobiography, which for I like to hear the other side of some of these things. So I did read his autobiography. I think this was about 6 years ago. And perhaps there was a lot of stuff in there that was pretty wild. I might add that basically what was in that book matched pretty closely what you saw in the movie Vice. So as incredible as that was, I don't think they were exaggerating. Although the best part is that Cheney talks about how when Nixon, right before we were getting ready to remove the U.S. from the gold standard, Cheney and Rumsfeld were part of the meeting to decide the price controls. And it was incredible because they describe it as like, you picture it's almost like that guy from the X-Files, the smoking man. And I imagine like a bunch of middle-aged white guys chain smoking cigarettes. And he describes when they were doing the price controls, how, Rumsfeld would say like, all right, I'll give you 2.1% on toupees, but dill pickles, you got to give me back 50 basis points there. And that was how this was being decided, not some economic formula or some great master plan. And perhaps the kicker to that was that he actually ended the chapter. This is Dick Cheney's words. Citing in the midst of all this, Nixon, he had the audacity to call him a great free market thinker as he's putting price controls on. And then, but the best part was he leaves with the conclusion that once again, we learned that the U.S. government should not try and determine the economy because it was a complete disaster. That was Cheney saying it. Of course, doesn't seem like that's what happened when he was president on behalf of George Bush. But fortunately, Dave, for important things like that and mining stocks, and knowing that Jerome Powell is, as you eloquently, you got a lot of love from last week's interview where you were fired up talking about Jerome Powell's hyperinflation campaign. Can you let folks know some of the great stuff you share on investment research dynamics?
Yeah, I mean, I've been kind of remiss about doing blog posts for the last week or two. I'm kind of in end of summer mode, but I post blogs that I hope have informative and interesting commentary, and then there's links to my mining stock journal and short sellers journal where you can read more about those and see what you get for the very undervalued price of $20 a month.
Well, I agree. I love the stuff you're sharing there. I was planning to get you riled up with a little Tesla talk this week, although I think we're about out of time. I know you have to get going, so we will wrap up for today, but just when you least expect it, I'm going to throw an Musk tidbit. Also going to do a fundraiser to see if we can raise money to get you a used Tesla. And you can't lease it or sell it. It's either you drive it or you just can't accept it. And we'll film how you would react to that, which I think would be powerful for ratings. So Dave, thank you again. Thanks for being my neighbor the last 4 years, and I'll be back one day, but I think you look good leaving you behind there in your Got Silver t-shirt, and we will look forward to doing this again next week.
We're going to miss you in Denver, buddy.
Well, I appreciate that, sir. But we'll be the show is global. We're going to go everywhere. I'm going to try and take the Fed tour when I get to New York in October. Maybe we can live broadcast there. If we could figure out a way to get a camera crew, and I'll get like a feed so you can ask questions to their representative. And but I'm going to travel around. We're going to have some fun poking the Keynesians. And appreciate you being here as always. And fortunately, folks, if you're still wondering some of the wild things that happen in the gold and silver markets this week, well, you don't have to go anywhere because it is coming your way now.